practiced, all good. There we go. Like you said, Bruce, there's a lot happening, and you mentioned quite a few things, and it's no different in the community management space, and I know in the rental space as well that Johan will be covering soon. So if we look at the community management industry overview, can you believe it? It's an industry approaching 50 years in existence. And like any industry, it's gone through stages of ups and downs as it matures. And unfortunately, we're seeing a huge number of positives as we approach this next stage of professionalization. In 2017, 20 to 30% of managing agents wanted to get out of industry and sell out, but there were very few willing and able buyers. We know that because that was the year we launched our business. And again, we saw a lot of people, and without any doubt, 20 to 30% said, listen, I like your software, but I'd rather just want to get out. So that was the stat back then. In 2024, however, we know of a huge number of companies wanting to further invest in the industry, wanting to acquire other managing agents. And in addition to that, we're seeing a lot of new entrants to the market. So it's all positive signs. And this is due to a couple of factors. So let's mention a couple here. In 2020, the industry proved to be one of the most resilient industries as it navigated through COVID, providing stable recurring income, while unfortunately many other industries suffered great loss. I think secondly, purpose-built tools and stakeholders have entered the market, providing specialized products and services aimed at industry specifically, obviously easing the pressure and workload. Thirdly, pro and a con, but the increasing regulatory requirements, as burdensome as they are, has highlighted the value and the importance of managing agents. And then lastly, I think without any doubt, again, a bit of bittersweet due to economical and political environment in South Africa, it is still one of the fastest growing sectors in the property, from a property perspective, with huge opportunity. But yes, there's many companies that still has this fork in the road. They haven't decided which way they're going to go. And the value gap still exists for so many out there. Then as we move along, we need to look at the unique business model of community management. And it's basics, but it's something that we need to cover because it really has a big impact and something that we need to solve as industry. So firstly, a developer builds a community, and then he gets all these people, random people from all walks of life, to buy into this community, buys into his promise. And basically, this developer leaves these people with some management structure and rules and a constitution or body corporate rules. And it looks something like this, where all of these people come together. They now become part of this community, become members of this community. And from amongst themselves, they choose willing people. And I would like to say willing and able people, but there's many times not able people that are willing because they are busy. And all these random people have their own day jobs on top of that. So they're not necessarily skilled to do this job. And secondly, they don't have the time to do this job very often. And that is where the managing agent comes in. Now, the uniqueness of this business model is that the directors, imagine this, the directors of the company, of the business, is not necessarily skilled at the business that they should run, but still they are the boss. And to make matters a little bit worse, just as they are now elected and they've been running for a year, they are typically replaced by other directors or trustees on an annual basis. And this is the root of a lot of frustration, but it also can be an opportunity if seen as such. Then, on a more positive note, is it a growing market? Without any doubt. There's about 60 to 70,000 additional units being added every single month, every single year, apologies. And there's definitely a new trend where closed off areas are established. So where previously freestanding homes or suburbs are now being closed off and forming communities to just help with general upkeep, etc., etc. So the market is definitely growing. Together with market growth, there's obviously challenges that is added to this market. So we see a couple of effort drivers here. We've covered this topic last year as well, but there's multiple income streams, Customer expectation is dramatically increasing. Council and metro failures are unfortunately part of the package. Legislation and regulation has increased significantly. Debt has increased. I think COVID was part of that, and obviously just the economic conditions we find ourselves in. Work from home and recently solar, due to Eskom, has been just these additional efforts that's been added onto the property manager. And this effort is a double-edged sword. Initially, obviously, it's more effort to be dealt with, which obviously is not great. But eventually, not everybody has the stamina or the grit to go higher onto this mountain. As the saying goes, if it was easy, then everybody would be doing it. So that makes everybody that sticks it out business more valuable. But I think the real question on this effort slide is not that the effort is really increasing. Is the price or the income we earn growing in relation to that effort? And I think we're going to cover that in our pricing stats a little bit later. And then we have to mention the email challenge, Bruce, before we bring in Hendrik to comment a little bit. So what we see here, we did a survey last year on the financial manager. We can see he's receiving about 50 emails a day, which is quite a lot. But more interestingly, the breakdown of where that comes from. So we have to differentiate, I think, between internal emails and external emails. We see exactly the same on the community manager. He receives significantly more emails, between 50 and 100. And I would say it's more closer to 100 than 50. And he also gets a significant amount of emails from his colleagues. And that is really to keep each other in the loop, break down these silos, because ultimately that community manager is facing the music. When he gets to a meeting, he needs to know what's plotting. But all these internal CCing is actually, enlarging this email challenge. So, with that said, Bruce, if you can bring in Hendrik and hear his thoughts on the topic.
No, wonderful. Thank you very much indeed, Donnie. Again, when in difficult times, people who are struggling or people who choose not to continue fall by the wayside, and it opens up markets, it opens up new opportunities. In times of great crisis, of course, it creates opportunities for growth by acquisition, or acquiring teams, or just acquiring portfolios. I remember chatting to Stephen Kosef, one of the founders of Investec, and he just said, look, when somebody in your patch gets into trouble, it creates an opportunity. And at that point, you've got to decide whether or not you can see through the short-term issues that they have now decided are just too big an obstacle to transcend, or just too high a mountain to climb, to steal Dani's image. And you then get the opportunity to grow from that. And it is often the most efficient way of being able to grow. Hendrik is the owner and managing director at Rise Properties. And Hendrik, I wonder, when as a business owner, and you look at the effort and the email challenges that Dani's been referring to, how is it impacting you? Does it drag your willingness to live out of you each and every single day as you open up that inbox and you just go, and you realize that every single person who's emailed you, certainly not the internal connection emails, but the external emails, the customer emails, everyone's got a problem and everyone needs it solved, and everyone needs it solved yesterday?
Morning, Bruce. Thanks. When I started in the industry, as a portfolio manager, we used to share a personal assistant. You used to go home and your inbox was empty, and that is definitely not the case. Emails have really spiraled out of control. We need more resources, more time. And I think the main reason for that is the changes in legislation, the different kinds of levies that are being raised. And the only way of the future is, in my opinion, through training. If I want to get my Telkom account, I go online and I get it. We have got the same tools in our industry, but we don't use it. Why not? It's a mindset change, and it's something that we can change through training. Training the clients to use online portals, training the clients on the different kinds of levies, what they're paying, why they're paying it, training the trustees on understanding the financials, especially if it's online. That can save so much time. So also, I think what is important is encouraging people to do some self-training, websites, blogs, attending, events like this, Facebook pages. And even though I think email is very, very important, I believe that the bulk of our emails can be avoided by using the tools that we already have at our disposal. People don't like change, so it is going to take some time. And unfortunately, most of us don't have the time to invest, but we have to. Because if we invest it right now, we're going to reap great rewards in the future. And there's this famous software company that keeps telling us we need to get out of our inboxes. And the more I think about it, the more I realize that they're right. I mean, the reality is that to deal with the influx of emails, the only way we can reach the future, or we can survive the future, quite frankly, is by using the tools we've got and by training the people we deal with.
Hendrik, thank you. I mean, Dani, that's a nice compliment. They're paying attention to you, at least. Paying attention. Yeah? Isn't that nice? Do you want to add to that, Dani?
Yeah, I just like what he mentioned in terms of change and education being needed, but it ultimately does come down to leadership. And I'm incredibly excited about the industry because I do see leaders standing up and being counted for. So, yeah, I'm incredibly excited. I think some of the stats, again, and we're going to jump into industry stats now, shows that there's leaders standing up and they're willing to be first and maybe not famous, but first, and break that new ground. So yeah, maybe with that, Bruce, I'm going to jump into a couple of industry stats. So this data sample was a sample nationally from just over 12,000 communities. 85% of them were body corporates and 15% were homeowners. And the first stats we're going to be looking at is the effort versus compensation. So this is 2023 prices, all right, that we've collated here. We can see that Pretoria is still the lowest. They were the previous year as well, still the lowest at 114 Rand per unit. And then Cape Town is the highest at 139 Rand per unit. And we can see it's still way below the effort price. What it really costs to deliver the services on a world-class level. Then 35% of the market is charging the effort-related fee, while 65% of the market is still way below. Now, the nugget of gold that came from collating all of these stats were when we saw that the upper price bracket on average grew nearly twice as much as the lower price bracket. Now, the assumption, and it's only an assumption that one can make here, is that if you are able to put the value on the table, there are clients willing and able to pay for it. And that is the good news. As all of us know, I mean, the price difference between, let's say, 130 and 180 is 50 Rand. Now, I've been in trustee meetings, Bruce, believe it or not, where the people fight about 2 Rand. All right. So I do understand that it's a really finicky business. But ultimately, it is 2 cups of coffee. And it seems like there's so many, in fact, 1 cup of coffee these days. Coffee
exactly.
Yeah,
I don't know where you get your coffee, but you
quickly. It's 1 cup of coffee. So it seems like there's enough people that is tired of being tired, all right, of getting bad service. If they can get it, they're willing to pay, what it's worth to get that service. Then we're going to be looking at the national debt per unit per month. Now, except for Cape Town, which is relatively low, I should say. I think the others are just extremely high, with Joburg at the highest at 7,250 Rand per unit. That is the debt per unit. It came down by 5%, thankfully, between 2022 and 2023. But the silver lining here again is that the managing agents, up from 30 to 39%, have realized that this requires a full-time professional focus and are now compensated for the service, where in the past they weren't. And which really led to bad service delivery, because if you don't get the income for the effort, the results are obvious. So this focused approach will definitely allow for better all-round service delivery, which is just great for industry in general. All right, then we're going to jump to clients, and the segment we're going to deal with here is, does clients have an understanding or awareness of this problem? And it actually happens quite a lot, and I think Hendrik can attest to that. But on sectional title living in SA, there was somebody that asked, I removed the name there, but somebody asked, this might be a silly question, but what exactly does or should a managing agent be doing? We use a well-known managing agent, but we are not sure we are getting our money's worth, nor are we sure what exactly should they be doing, as it seems that we are doing most of it. That is currently where so many people find themselves. They do not understand exactly what the value of a managing agent is. In our survey, again, end of last year, we asked, what is the biggest challenges? And the high emails was again top of the charts. But I think the second and third one, speaks to this issue, because it's ignorant and unrealistic trustee expectations. It's just because these, again, coming back to the unique business model, these people do not really know what it should be that they need and what they want. So it becomes everything, and that expectation is just unrealistic. And secondly, the value gap. A lot of the work is let's call it back office work, and they don't physically see it. All they see is the dark barking, but the work to get everything sorted out is many times not visible. We just added those stats from why business is lost as well. Trustee politics being the top of the charts there, but again, not being able to meet client expectations. And I think this iceberg slide, Bruce, depicts it very well, because what people think a managing agent does and what is really happening behind the scene is very often very different. There's so many skills, so many stakeholders to manage. We're going to get to stakeholders in a moment, and so many risks that these trustees and directors are often not even aware of. So it's something that has to be dealt with.
It's all about collaboration, I suppose, and working together. But the trouble with working together is the registrar of banks, a former registrar of banks many years ago, a guy called Errol Kruger, once said to me, early 2000s, there were lots of joint ventures in the banking sector, and he hated joint ventures. I said, why do you hate these joint ventures so much? He said, because it's all about samenwerken, working together. And I said, so what's wrong with samenwerken? He said, the problem with that is, we both know that we're Sam, we think the other one is working. So we all think we're together, but we think the other one is doing the work. And maybe that is the problem, of course, when it comes to this issue of management. Let's go now to Marcus Kaps. Marcus is the owner of PropInsure. And how do we narrow this expectation gap, Marcus? I mean, it's just such a disconnect, and it shouldn't be a disconnect. And there's almost a training that has to happen of trustees to say, this is your role, this is what you've signed up for, understand that you have a fiduciary duty, and this is what we do, this is what you do. But then that takes a 3-month handover, and then you've almost got to begin the next 3-month handover 6 months later to get the next lot in, because this is a transient space. Nobody wants to be a trustee. Usually they either forced into it, or they are so desperate to get their sectional title or their homeowners association working effectively that they feel obliged to do it. But nobody's ever really happy doing the job. And if they are happy doing it, you've got to question whether or not they're sane. But anyway, Marcus, how do we get the balance right?
Thank you, Bruce. Yeah, what we've seen is that we receive calls from trustees, and typically they are just fairly disenchanted with their incumbent managing agents. We hear, they complain that things don't get done, they don't get responses to queries, and they don't have any confidence in their managing agent actually acceptably managing the body corporate. We firmly believe in our business, albeit a smaller portfolio than many of the other managing agents out there. We very much focus on service, and to Donnie's point regarding what you can charge, there definitely is a case for where you provide service, you can earn greater fees for that, and you'll be surprised that trustees are prepared to pay for that service. when we adopted the WeConnectU CMS platform in June 21, we really saw a number of levels of value. And one of the areas that, one of the levels that we see this, and it's about seeing the value in your business. So yes, there's an income stream as a managing agent, and that's always been there, and one obviously tries to increase that. But I think there's a real intangible that I see as a real tangible, even on a balance sheet, and that is the quality of data and information that we are now collecting in our platform that we are working within. And I even believe, and this can be a bit of a controversial topic of discussion, but I believe it can actually be monetized. And Dani talks of consolidation in the industry, and I certainly see that maybe one day that I could see the value of the quality of that data and information. Certainly from a trustee's point of view, our take is that trustees are decision makers. They shouldn't be doing the work. We must be doing the work. In your analogy of Samenwerken, the Sam is ourselves and the trustees working together, and that's critically important because there are many bodies corporate where those relationships are toxic between those parties. But it's important working together. But the important part of it is we do the working, they do the decision making. And I think in a lot of bodies corporate, that is not the case, where trustees are very frustrated and not qualified, as Dani quite rightly said, to do the work where we are. I think another level of value is we can focus on the business. So our business is management and administration, getting stuff done. And with our relationship with WeConnectU, they focus on the tool, we focus on the business, and we have peace of mind that the tools we're using, we're not having to worry about spreadsheets being robust and being correct. We really rely on their tool to give us the platform in which we operate. And then I think the last level of value really is with our staff. We all work in a consistent way, and with processes and systems on a daily basis. And I think that's by doing that and giving our trustees the transparency, and we've got nowhere to hide because everything's very detailed and very accessible in real time. Our trustees then gain confidence, and I think that's how we go, closing the gap of expectation between what trustees want from us and what we can actually deliver.
That's a very valuable point. Thank you very much, Marcus. Dani, I mean, it is the building the trust, and once you have trust, then you can collaborate and you can work together, and everybody understands where they stand, don't they?
100%. I think there's a little bit of a chicken egg scenario. So on the one side, I need more money to create more value, all right, and on the other side, who's going to be first? Who's going to be the one that says, okay, I will create value first, and then you pay me more money, And I think that's the balance. Fortunately, I think based on the stats, we are seeing that some of the managing agents are managing to put the value on the table and then demand the price for that, And I think that's the key. That's the leaders that we are looking for, to take it to a whole nother level. In terms of service delivery, because if we aren't doing the job, then we are at fault, but then we need to be able to communicate, what we should be getting to deliver that value that the trustees ultimately want. But yeah, it's a bit of a chicken egg scenario. We need trust, agreed. And but again, there's leaders, Bruce, that's leading the way. I'm confident we'll get there. All right, from a competitive perspective, thank you, Marcus, for those comments. We're going to cover only the pricing strategy section today because the price has been a topic. Being able to create that value is a topic. So a couple of thoughts. It's just a couple of thoughts, Bruce. Some interesting thoughts. So there's typical pricing strategies. The one that the two that everybody is aware of is you get the lower price, all right? And the benefit of a lower price that you could be seen as a cost-effective solution, attracting those customers, those type of customers that want a lower price. And the potential downside is that you do not generate enough profit to deliver the quality of service required. Now, if I listen to what Marcus has been saying, it seems like, and the pricing study, it seems like many are falling into this bracket, all right? Then you get the higher price, okay? And the benefit here is that you obviously are positioned to generate more profits, which enables you to deliver greater service. While the downside is that it might deter some cost-sensitive buyers. Now, the common theme between this lower price and the higher price is that both are cost-sensitive still, all right? The buyer is still cost-sensitive. So then there's this term called the dead zone, if you talk pricing strategy. And the term dead zone in pricing strategy typically refers to a range of prices where a product or a service is neither priced competitively enough to attract customers, nor priced high enough to maximize profitability. That's the dead zone. There's fierce price competition. Every cent matters here. And if you want to avoid the price war, this dead zone, you need to employ another strategy. All right, and it's called flanking. So there's flanking from a low-cost perspective. And you can only employ flanking from a low-cost perspective if you are able to achieve unrivaled efficiency, and that with very high volumes, all right? The benefits of flanking with low cost is you could be getting quick market penetration, all right? You also have a competitive advantage for budget-conscious consumers, which it seems there's quite a few out there. And then thirdly, there's a barrier to entry for competitors. So those are the benefits, but we also have to look at the disadvantages of flanking from a low-cost perspective. The disadvantages are thin profitability margins. That's a theme that we hear in the market quite a lot. There's sustainability concerns because of those thin profitability margins. Then, very importantly, there's an inability to invest in innovation, because many times you just find yourself that there's not enough margin to actually now invest back in your business. And probably the worst disadvantage is in this segment, customer loyalty is based on the price. Customer loyalty is based on the price. And I don't think anybody wants to build a business where price really is only what the customer is after. Then you get flanking from a high price perspective. And flanking from a high price perspective is when you obviously price yourself much higher than the averages. And you can only employ this strategy if you are positioned to create superior value consistently. Again, a couple of benefits and disadvantages, advantages, disadvantages. So firstly, if you price yourself in this category, you are immediately perceived as quality and exclusive. Secondly, there's definitely, for obvious reasons, enhanced profit margins. Thirdly, there's resources now to invest in innovation. And then fourthly, the client is not that price sensitive, but rather value sensitive. So you're only fighting one battle. If you're in the dead zone, you always fight price, but those customers typically want all the value as well, all right? If you're playing, you flank from let's call it the premium price perspective, the client really wants value. He knows that he can get it cheaper, but he wants the value. And if you can put it on the table, he will remain loyal. The disadvantages, you need much higher marketing skill. So it's all about now communicating your value, which I think is something, it's an actual skill to be able to communicate that additional value that you're putting on the table. Limited market reach, because there's obviously, you've now chosen a certain niche market that you're going to be playing in. And then the need to maintain consistent quality. And that challenge you're either up for or you are not up for. Then I ventured, if you guys don't mind, to try and add the current pricing as per our statistics into this slide, just as a visual. And it seems like the clients venturing, in the upper bracket price range, in the premium price range, are seeing the results. Whilst in the lower price bracket, there's still growth. And I think it's really because the market is growing so much, that everybody's experiencing a good portion of growth, but it's significantly lower. All right, so I'm going to leave that slide for everybody just to ponder upon. And then lastly, we're going to touch on stakeholders before we bring those other panelists in, Bruce. Stakeholders, again, who we collaborate with to now meet this need. And obviously, trustees and directors are that customer, that client today. And in order for their needs to be fulfilled, there is a host of stakeholders and software, security, maintenance. And I mean, that's not even all of them, you know, on the screen, but there is a host of stakeholders. I think more so than most other industries in order to deliver this consistent value. And the managing agent finds himself smack bang in the middle. And the question from a stakeholder perspective that we want to just land with today, Bruce, and then we hand over, are you allowing your stakeholders to make of you a post box, or are you creating a platform of value? And I'm keen to hear from the panelists what they think of that topic.
Okay, good point. Thank you very much, Dani. Leroy Coleman is the CFO at Coleman Properties. And Leroy, you're the bean counter. It's your job to make sure that the margins grow and that the value is upheld. How do you go about it, expanding the margin without giving so much extra value that it ends up costing you money? I mean, that must be the thing that keeps you awake each and every single night.
Good morning. Thank you, Bruce. This is a bit of a minefield that I have to navigate today, but let me give the pricing battle a go. So firstly, I'm going to touch on why, for instance, at least in our portfolio and our business, there are definitely clients where we are not charging the value that I believe we bring to the table. And to Dani's point, that does not always, that then counteracts us to be able to deliver the service that I would like us to deliver to those clients. And it doesn't then enable us to employ more creative technologies or allocate the correct qualified people to fulfill their needs. So the first thing I would like to ask my fellow property managers today is, do we know our own worth? And this is quite a difficult question. And if we cannot with confidence value our own service, how can we then expect our clients to be able to do that? With that being said, just my opinion on major influences on charging less than what we are worth. From what I've seen, firstly, a big portion of the market is highly price sensitive. Of course, there's many factors that our clients experience in terms of other day-to-day living expenses. And a levy is a bit of a grudge expense to a lot of our owners. It's not something that they're excited to pay at the end of the day, and the management fee does form one of the items that go into that. So just my viewpoint that a lot of clients and trustees out there feel about managing agents like I feel about a loaf of bread. I take whatever's on special when I'm at the shop, and it will get the same job done, and it tastes similar after I toast it. But the reality is that managing agents are not a loaf of bread. There are many factors that need to be taken into account. So our challenge here is to communicate our value that we can bring to the clients, and then for them to take that into account when making a decision, and not only to look at the cheapest option. Then the second item for me contributing to this problem is intense competition. So of course, there can be a different viewpoint to that, and competition is very good. Especially for the clients. In a highly competitive market, it does ensure competitive pricing. But we need to counteract that with fair pricing for the value that is brought. So what we've experienced also, many new competitors, the barrier to entry has been reduced over the last few years, in my opinion. For instance, even just a management system, in my opinion, for entrant into the market now is a little bit less expensive than 10 years ago, for instance. A lot more infrastructure required 10 years ago. Do not run on Excel spreadsheets. So, and then for some of these new competitors and existing competitors, often it's more important to win the deal than to get it at a profitable rate. And that's negative for everyone involved. So then on to the next part, how do we get to, especially my job, in terms of focusing on profit and the resources required to deliver the service we really want to deliver to our clients. So just for me, my viewpoint, and I see the management fee per unit, but for me, it's very important to look at the profit. Are we servicing this client at a profit, or are we actually making a loss? So that's a very difficult thing to establish, but you need to try your best to work out on each client whether you're actually operating at a loss or a profit. So I'm not saying that you should not service those clients. Every bit of income contributes to the bottom line, but it's important to establish that. So we need to determine what resources are needed to fulfill the requirements for the client, and then compare that to the income. So within a portfolio, at least in our business, I would guarantee that there are buildings where we are making a loss. And for me, it's important to know who they are, and then we need to work on solutions to correct that. No knee-jerk reactions here, but it's important we can't just leave it as it is, because for people in similar position to myself, we also know the pressure we have on costs and salaries the last few years. And having those clients where we are making a loss does not contribute to us growing in the right direction. Then, very importantly, I don't want to add to my list. So I don't want to add to my list where I'm making a loss. So in some cases, for a new business opportunity, that competitor can have it if he's going to be able to satisfy their requirements at the rate that he's quoting. But to my point, we need to discuss what they need and how we can bring that value. So in my opinion, by staying true to this process and making sound business decisions, and we can charge a price reflecting the resources that we allocate to a client, I believe we'll move into that direction that Dani has touched on earlier. Thank you.
Leroy, thank you. To Jonathan Akert now. And Jonathan, Dani was mentioning post boxes and postmen. I mean, things that we don't relate to anymore. What is a post box? What is a postman? We've forgotten. But I think it's a term of being generic and not. How do you get out of the trap? I think that Dani was sketching for us.
Thank you, Bruce. Thank you, Dani. I think it's so important, the point that Dani raises, when getting down to the internal belief as managing agents of exactly what it is that we do to add value to our customer. And I want to follow on with the analogy of the post box, Bruce, if you don't mind. And just remind everyone that postal services have been around for hundreds of years. And I think specifically in SA since the early 90s, and I only know that because obviously my favorite color is red. But then also considering that emails have been around since the mid-2000s and only really sort of widely, adopted since then. And I think we're just beginning to still understand how to formally use email services, and I think the word that I use is email etiquette. Sending off an email and expecting someone to respond right away. So I think in contrast, in the current age, sort of with digital technology where it is, it takes seconds to forward on an email across the world. You can even send them in bulk. So I can understand why our customers, trustees and owners have a diminished view of what formal or let's say effective communication actually is. And referring to inbound and outbound emails being more of a quantity issue and not a quality issue. So, in our business, I use the phrase that I say it's become too easy to pass the buck. And as a property manager, to just forward on that mail to the relevant parties and not apply in any way. So the point is that, it makes sense from a value point of view, but not necessarily from a value point of view, but definitely not from a time point of view. And as a business owner or property manager, you'll understand that time is money. And the more time you spend on a matter, whether it be an important point or a not so important point, that there's a cost associated with that. I think the previous panelists spoke about that. So the image that I have in my mind when trying to make the point is, if we had only the one opportunity to get our advice or let's say formal response across, would we not take the time and write a love letter to carry on with that? And knowing that by putting in that effort, we would actually get, we would reduce the overall time that it took to communicate with those customers.
How much more complicated, Jonathan? Jonathan, how much more complicated? Let's put email aside for one moment. Now we get the WhatsApp group, and that's just chaos. Okay. Let's not even go there. I mean, I just think, WhatsApp has amplified the chaos of the communication and the miscommunication, I'm sure, infinitesimally more than email, where tone matters, all of that sort of stuff. Geez, well, I mean, you're asking for trouble, I suppose, if you then say, okay, fine, we're going to set a WhatsApp group between the property manager and the trustees. I'm guessing that's a no-go zone, right?
So, Bruce, I've actually had this, and I'm going to be honest with you because you deserve it. I have two numbers. I have my personal cell phone and I have a business WhatsApp number. So I only go into trustee groups on the business number, and I check it twice a day. And that's the understanding. But I do want to say this week there was a very important matter. I spent 3 hours compiling an email referring to the different acts that we have to know and understand. And it's been 3 days and I haven't received any of the immediate responses that I would normally get back. So I think, yeah, I do practice what I preach. But yeah, it is tough. I think there's a couple of Facebook groups that are community manager support groups, where everyone sort of says, hi, my name's Jonathan and I'm a property manager. So I think if we're going with the point of value and my closing point, in our business, we say don't pass the buck. I think it was a US president, I can't remember his name right now, but he made the phrase, the buck stops here. And I think that's, in summary, the point that I want to get across is that if we spend our lives passing the buck, eventually it's actually just going to come around to you. And it's important for us as property managers to make that statement and say the buck stops here and I'm the specialist, and add that value to our customers. So yeah, that's I really believe is something that also is emphasized and through the portal. I just needed to say that because we are using it more and more every single day for communication. It's really effective.
It was Harry Truman, the buck stops here. And see, because I've been thinking about.
I thought you were on a trusty WhatsApp group there that you
Harry Truman, this is actually quite interesting. On his desk in the White House, Harry Truman had a wooden sign engraved with the buck stops here. And it came after he visited a federal reformatory in Oklahoma. And he saw a similar sign in the reformatory, and he asked the warden if a sign could be made for him, and the sign was mailed to the president on the 2nd of October 1945. It was Harry S. Truman who had the buck stops here on his desk.